What if I told you that right now a silent war is being fought across the world? A battle that could decide who controls money, power, privacy, and freedom for the next 100 years. This isn't a war between nations. It's not left versus right, and it's not happening on a battlefield. It's happening in the financial system, where governments, central banks, technology companies, and blockchain networks are competing to shape the future of money. On one side are central bank digital currencies, also known as CBDCs. On the other side are private stablecoins. And caught in the middle is the future of a free society. So what exactly is a CBDC? A central bank digital currency is a digital version of a country's official money, created and backed directly by that country's central bank. At first, this may not sound very different from the digital money we already use every day through banking apps, debit cards, or online transfers. But there's one major difference today. Most digital money exists as balances issued by commercial banks. A CBDC, however, would be digital cash issued directly by the state itself. In simple terms, the money in your bank account is essentially your bank's promise to pay you, but a CBDC would be a direct claim on the central bank itself. That's why central banks around the world are paying very close attention to this technology. And this is no longer some futuristic theory. In 2026, dozens of countries are actively testing, researching, or launching CBDCs. China continues expanding its digital yuan in real-world payments. India has significantly expanded its digital rupee pilot, with millions of users involved in testing programs. Countries like Bahamas, Nigeria, and Jamaica already have live retail CBDCs. Meanwhile, the United Kingdom is still exploring its digital pound, but the Bank of England has officially confirmed that no final decision has been made, and its design phase continues through 2026. The United States has also made no decision to launch a digital dollar, with the Federal Reserve stating that any such move would require legal authorization. So why are so many people concerned about CBDCs? Because critics argue that, in the wrong hands, CBDCs could become the most powerful financial surveillance system ever created. Unlike physical cash, every digital transaction can potentially be recorded, tracked, and analyzed in real time. Every purchase, every transfer, every payment, supporters say this could reduce fraud, improve payment efficiency, and modernize financial systems. But critics warn that the same infrastructure could also create unprecedented levels of financial oversight if future governments choose to expand those powers. And it doesn't stop there. One of the most controversial aspects of CBDCs is something called programmability. In theory, digital money could be programmed with rules money that expires after a certain date, funds restricted to certain categories of spending, or payments that can be paused, limited, or frozen. Governments insist these tools could improve welfare distribution, reduce corruption, and make public payments more efficient. But opponents argue that if such systems were ever abused, they could fundamentally change the relationship between citizens and the state. But CBDCs aren't the only future of digital money. Enter stablecoins. Unlike CBDCs, stablecoins are issued by private companies rather than central banks. These digital assets are usually backed by real-world reserves such as U.S. dollars, government bonds, or gold, and are designed to maintain a stable value, often one coin equal to $1. Built on blockchain networks, stablecoins can move across borders almost instantly, 24 hours a day, without relying on traditional banking infrastructure. That's why many people see them as a potential alternative to government-controlled digital money. However, stablecoins come with their own risks. Since they're issued by private companies, trust becomes everything. Are the reserves really there? Are they fully backed? Could the issuer survive a financial panic if millions of users tried to redeem their coins at once? These concerns pushed regulators to act, and in 2026, stablecoin regulation is accelerating globally, with central banks and financial regulators building new legal frameworks for privately issued digital money. Even the Federal Reserve has published research examining how regulated payment stablecoins could reshape global payments. So, what does the future actually look like? The most likely answer is not one system replacing all others, but multiple systems existing side by side. Physical cash, bank deposits, CBDCs, stablecoins, tokenized assets, each competing for trust, adoption, and influence. And that's why this battle matters so much, because the future of money won't just be decided by governments or banks or technology companies. It will also be shaped by the choices ordinary people make. And the decisions made over the next decade could define financial freedom for generations to come.